Hey fam, what's good? What's good? I hope that you're all well and keeping safe. I hope that you all had an amazing day. I hope that you all had an amazing week. So, you know what? This content which I am about to share with you guys is basically a free webinar session which I made. And you know what? This is covering a model from ICT, right? This is not me trying to claim this course. I invented this and all of that. No, this is just simply me sharing my take of what I've learned from ICT, right? And who will teach it better than me? Than ICT? ICT. It's totally free for you to go watch whatsoever, right? But I would like to share this with you guys. This is simply, you know what, how to identify the actual model, you know, your pattern. This is simply certain things that I'm looking for before entering my actual trade whatsoever. So you know what, I hope that this content will benefit you guys in some way. Okay, I would really appreciate your feedback as well. You can find yourself dropping an actual comment in the comment section. I will highly appreciate it. And for all the new people watching this, welcome to my channel. You know what, Take Over Forex Institute. And please do hit that like, please do hit that sub button. I will highly appreciate that. So without wasting no time, let's get into the content. Enjoy. Rules. Okay, let me put this on recording. Clean. There's one thing called rules. Okay, now on your trading view, you need to change your time from SA time to New York time. Okay, you need to change your time from SA to New York. I will show you later on how to basically do that. Okay, our trading hours is from midnight open until 5 p.m. evening session. Okay, from midnight open until 5 p.m. That is our trading session. Okay, between 12 and 1, that is lunch hour. We don't want to find ourselves taking trades inside those areas. Okay, between lunch hour. Mr. Escobar, Mr. Pablo Escobar, please do mute your mic. Please do mute your mic. Please do mute your mic. Okay, so first things first, right? We're going to look at what do we expect from an actual buying opportunity. Okay, now I need to walk through this with you guys like step by step. Okay, so first we're going to identify how this pattern looks like, and all these keywords, right, such as swing lows, swing highs, displacement, fair value gaps, discount, premium, whatsoever. We will cover that in slide 3. Okay, so don't stress about it. Don't stress about it. Okay, now let's start on our left-hand side over here. To every system, there needs to be rules. And with this system, I simply have 7 strict rules. Okay, only 7. Rule number 1 for buying opportunities is basically to wait for price to take out a swing low first. Okay, what we want to see is price taking out a swing low. Rule number 2, we want to find ourselves seeing if price can take out a swing high. Rule number 3 will basically be an aggressive move towards the upside, right? Basically displacement. This simply means that price is moving from one point to another. Rule number 4, identify your fair value gap. Okay. Rule number 5, crucial as well, right? Identify whether your point of interest is inside a discount area. Okay, rule number 6, execute your trade and place your stops below the candle which created your fair value gap. To be safe, you can find yourself placing your, you know what, your stops below your low. Okay, rule number 7, you target your 50% or your nearest high. Now let's look at the sketch and you know what, put 1 to 1 together. Well, one or two together, or how do you call it, on what I basically just mentioned over here, okay, with these rules. Now, rule number 1, right, if you're going to look at this pattern over here, right, if I can maybe have my drawing tool out. If I can maybe get my drawing tool out.
If I can just hide this. Show people on touch the. Well, if we see this actual pattern over here, right? Rule number one, we basically want to see price take out a swing low. Okay, where's your swing low? This region over here. That is your swing low. Okay, that will basically be your swing low. That is the area you want to find price take out first. And can you see what we did over here? That is what you want to find yourself looking out for. Okay, rule number two, we want to see price take out a swing high. Where's your swing high? Right at this area over here, lining up with this 50% over there. That's rule number two. Rule number three, displacement, an aggressive move towards the upside. Right? You don't want to find yourself waiting for price doing small increment candles towards the upside. No, you want to see price having a huge push towards the upside. Okay, not small candles, a nice actual bull momentum towards the upside. Rule number four, identify your fair value gap and where do you want to find yourself having your fair value gap at, right? You want to find yourself getting your fair value gap inside your discount area. Now, your discount area is literally everything below, well, in between your 0% and your 50%, right? So in between your 0% and your 50%, this area over here, that is your discount area. Okay, this simply means that price is cheap at this area over here. Okay, and this is basically the area where you want to find yourself identifying your fair value gap, enable for you to get those long opportunities. It only makes sense, right? When you walk into a store and you see an actual product that is on sale, what are you going to do? You're going to buy that product. Same analogy. Same analogy. So all you wait for is for price to pull back into a discount area and you identify your fair value gap. And this is where you find yourself buying price. Okay. Execute your trade and place your stops below the candle, which basically created that fair value gap. Or you can find yourself placing your actual stops below your low, which is this area over there. Right? Or this area over there. You choose. Okay, you choose. Once we get into the charts, you will have a clear understanding. Any questions whatsoever when it comes down to an actual buying opportunity? Any questions whatsoever? Notify me in the comment section. Is there any questions whatsoever when it comes down to an actual buying opportunity? And if you have a question, feel free to ask. Feel free to ask. If you have a question, feel free to ask. You start at 15 minutes and move down to 1 minute, right? Yes. Yes. But for now, do you understand how this pattern looks like? That's all I want to know. Do you understand how it looks like? And if you do, please do get this down, all the rules with this actual sketch, and notify me once you are done. Notify me once you are done. It's clean. And notify me once you are done. Well, excuse me. Done. Done. Okay. So while some is still busy, notify me once you are done. So first thing we want to see price take out our swing low over there, like we just did over there. Rule number 2, we want to see price take out a swing high, like we did over here. Rule number 3, we want to make sure that this was a clean displacement towards the upside. We want to wait for price to come towards the downside inside our fair value gap that is lining up inside the discounted area for us to take price to the upside. For us to take price to the upside. Notify me once you are done so that we can move on to the selling opportunity. With selling opportunity, very, very simple. Just stick to these simple 7 rules. Just stick to those 7 rules. That's it. That is it. Just seven rules. Okay, just 7 rules. Everyone done? Can I move on? Can I move on? Oh, exactly. When do you know when to buy? Basically, when price is inside an actual discount area. Okay. When price is inside the discount area. I will show you. I will show you. Don't stress. Don't stress. Let's go. Selling opportunity. Okay. Selling opportunity, literally the opposite of a buying opportunity. Okay. Now for selling opportunities, rule number 1, right? We want to see price take out a swing high first. Rule number 2, we want to see price take out a swing low. Okay. Rule number 3, we want to identify our displacement, whether we had a strong, aggressive move towards the downside. Okay. Rule number 4, identify your fair value gap. And rule number 5, identify whether your point of interest is inside a premium area. Okay. Note, your buying opportunity was inside a discount area. Your selling opportunities is inside a premium area. Okay. Rule number 6, you execute your trade and you place your stops above the candle which created your fair value gap. You know what? You can place it at your actual highs to be safe, right? These areas will basically be your highs to be safe. Okay, you target which area? Your 50% or your nearest low. Okay, your 50% or your nearest low. Now let's look at the sketch. Let's look at the sketch. Now, rule number 1, we want to see if price can take out a swing high, right? This is our swing high right over here. Now, at your swing highs, right? This is where buy-side liquidity is resting. Okay, at your swing highs, this is where buy-side is resting. Okay, so you want to see price have a nice move towards the upside, just like you are seeing over here. That's rule number 1. Rule number 2, a swing low, right? You want to see price take out a swing low, which is this area over here, right? Rule number 3, displacement. You want to see price have a nice aggressive downside momentum towards downside, right? Rule number 4, identify your fair value gap and where should your fair value gap be, right? In your premium area. Now, in between your 50% and your 100%, this is basically where you will find yourself having your premium areas, right? This is basically where price is expensive. So this is where you want to find yourself selling price. Okay, this is where you want to find yourself selling price. You execute your trade and you place your stops above the candle which created your fair value gap, or you can place it above the high. Your target will basically be the 50%. So all you're going to find yourself doing is wait for price to head towards the upside inside your actual premium area. And this is when you're going to find yourself looking to go short with price. Okay, this is when you're going to find yourself looking to go short with price. Any questions whatsoever when it comes down to our selling opportunities? Any questions whatsoever? And if you have no questions, please do get these rules down and please do get this sketch down for me as well. The next slide, we will basically cover the key elements to this actual method. Okay, the key elements to this method. So notify me once you are done and you understand. And if you have any questions whatsoever, feel free to ask. Feel free to ask. Feel free to ask. Only 7 rules. Only 7. And you only look for that pattern over there. This pattern when it comes down to selling opportunities, and the other one when it comes down to buying opportunities. Simple, simple, simple. Notify me once you are done so that we can move forward. Done. Clean, clean, clean. Done, done, done. Okay, done. Once we're going to get to the charts, you know what, you're going to have a clear understanding. Then we're basically going to combine everything so that you know how it looks like. Notify me once you are done so that we can move forward. And this done, clean, clean, clean. And this done. Sami done. Notify us once you are done. You're done, clean. Now, buy side, sell side liquidity, right? Buy side, sell side liquidity. Now let's look at buy side and sell side liquidity. Now, this is basically what you need to take away when it comes down to buy side and sell side liquidity. Okay. Now, buy side liquidity. In your notes for buy side liquidity, get this down. Put down buy side liquidity. Rule number 1. Buy side liquidity will always be above price. Okay, that's rule number 1. Buy side liquidity will always be above price. That's rule number 1. Okay, rule number 2 for buy side liquidity. When price take out your high, we are looking for selling opportunities. Okay, so once we have a sweep out of your actual buy side liquidity, we are looking for shorts. We are looking for selling opportunities. That's rule number 2. That's rule number 2. Okay, now with buy side liquidity, looking at this little sketch over here, which we have over here, right? Now, with buy side liquidity, right? This simply means that, you know what, everyone who went short over here, everyone who sold price over here, right? I don't want to mention the name retail traders because we are all retail traders, but the people that is trading normal support and resistance, right? Price tapping to an area of resistance, we go short. Price tapping to an area of support, we buy price, right? Now, over here, everyone who went short, everyone who sold price over here, right? These people, the market maker will make them happy. Look at it like that. The market maker will make them happy. Then what will happen next? Next, the market maker will push price towards the upside and take out everyone who went short over here. Where's their stops? Above this area of resistance. Okay, their stops will be above this area of resistance, and there the market maker basically took out those individuals. Okay, now your breakout traders, right? Your breakout traders will basically tap into this area over here. They will find themselves going long with limits with a bull candle thrown towards the upside, basically closing above the area of resistance, right? Now turn to support. What will the market maker do once again? The market maker will push price towards the upside, make them happy, and guess what will they do? They will push price all the way down, just like that. Just like that. Now, with me saying this, right? With me saying this, can you guys see this pattern which we have over here? Can you see this pattern over here? What do we have over here? Buy side liquidity. Did we take out a high over there? Yes, we did. Right? This was our high. Did we take it out? Yes, we did. We had a low over here, a turning point. Did we take it out over there? Yes, we did. So what is the next step? The next step is for us to wait for price to pull back into an area of, inside an actual premium area so that we can short price. Okay, can you guys see that actual pattern? Does that make sense? Can you see the pattern? Do you have a clear understanding when it comes down to buying? Do you have a clear understanding when it comes down to buy side liquidity? Do you have a clear understanding when it comes down to buy side liquidity? Or do you have a question? Should I go over it again? Notify me. One more time. One more time. Okay? So, buy side liquidity, right? Everyone who went short, everyone who sold price over here, right? Everyone who sold price, the market maker will push price towards the downside, right? Making traders happy for, you know what, being in profit, right? Now, this game is designed to take money from us, right? If you're not following smart money, what I'm basically showing you now is smart money concept, okay? If you're not following smart money, this is what's going to happen with you. Okay. The market maker will basically take out everyone at an obvious position, right? An obvious swing point, which we have over here. Please mute your mic. Well, let me mute it for you. Okay, it's muted. So the market maker will basically take out everyone who went short. Well, we'll make everyone happy who went short over here. Okay, right over there. Then the market maker will push price towards the upside. Your breakout traders, right? This is traders that, you know what, if a actual trade is going to break above this area of resistance, where this is a bull candle thrown towards the upside, now turn to support, they're going to find themselves buying price, right? They're going to find themselves buying price. They're going to place their stop loss below this area right over there, right? Because traditionally that was taught, that was taught to us, okay? Traditionally that was taught to us. Now the market maker will push price towards the upside and literally dump price all the way down, right? Now we basically took out everyone who went short over here, and we took out everyone who went long over here as well, right? This they consider as dumb money, right? This momentum over here, smart money, right? That is liquidity. You will hear some people talk about a liquidity pool, right? This is a liquidity pool. So we want to wait for a liquidity pool to happen, okay? And then we implement our strategy, right? We can see that a high was taken out. We can see that a low was taken out. All we find ourselves doing is wait for price to pull up inside the premium, and we will short price. And we will short price. Okay, that is how you look at buy-side liquidity. That is how you look at buy-side liquidity. Sell-side liquidity, however, the opposite. Okay, the opposite. Sell-side liquidity inside your notebook. Inside your notebook, get this down. Inside your notebook, get this down. Sell-side liquidity will always be below price. That's rule number one. Sell-side liquidity will always be below price. That's rule number one. Rule number two, once sell-side liquidity is taken out, what do we wait for? Buying opportunities. Okay, buying opportunities. That's rule number two for buy-side and sell-side liquidity. That's rule number two. So clean. Let's look at sell-side liquidity. This is literally the opposite, right? So the average trader, right, will basically be like, okay, cool, we're tapping inside an area of support over here. Right, in an area of support, what are we looking for? We're looking for buying opportunities. Okay, we're looking for buying opportunities. So they will find themselves going long over here. Where's their stops? Their stop loss will be below the swing low over here. Right? Right over there. So the market maker will make them happy by giving him a blue screen, him or her, a blue screen right over there. And guess what? Boom. That is what the market maker will do, right? Now you get another type of trader you get, right? A breakout trader. This area of support is now serving as an area of resistance, right? So what do they find? What are they going to find themselves doing? They're going to have some selling limits resting below this area. Where are their stops? Above the area of resistance. What do you think? What is the market maker going to do next? Will the market will the market maker push price further to the downside, or will the market maker push price to the upside? Let me know in the comment section. Will the market maker push price towards the downside, or will the market maker push price to the upside? Let me know. Let me know in the comment section. The market maker will push price towards the upside. Okay. Taking out all the short positions. Clean. So can you see what happened? The market maker took out everyone who went long over here, right? And took out everyone who went short over here. Now is our time to get inside the market. So all we're going to find ourselves doing is what? What are we going to find ourselves doing? We're going to identify our pattern. Okay. We're going to identify our pattern. And what can you see over here? What can you see over here? We took out a high, well, a low, right over here. Right? Rule number 2, we wait for a high to be taken out over there, like we did over here. Rule number 3, right? We want to look at this displacement. And then we want to find ourselves having our fair value gap inside our discount area so that we can take price to the upside. Okay. Do you have a clear understanding when it comes down to buy side and sell side liquidity? Do not complicate it. Do not complicate it. All you need to find yourself doing is, if price is taking out buy side liquidity, you're going to find yourself waiting for your pattern to occur to take selling opportunities. Okay. If price is going to take out your sell side liquidity, right? You wait for your pattern once again to go long. That is it. That is literally it. That is it. That's all you need to find yourself taking into consideration when it comes down to buying and selling liquidity, buy side and sell side liquidity. Okay. Buy side and sell side liquidity. So for buy side and sell side liquidity, please do get this little sketch down over there. You already have your actual rules once it comes down to your buy side liquidity, right? Buy side liquidity, always above price. Rule number 1, once we take out buy side liquidity, we are looking for shorts, right? We're anticipating price to go low. That's your rules for buy side liquidity. Sell side liquidity, rule number 1, it's always below price. Okay, it's always below price. Once we take out sell side liquidity, what are we waiting for next? Our pattern for our long opportunity. Okay, that is how you need to find yourself looking at buy side and sell side liquidity. Okay. Are we still on the same page? Are we still on the same page? Notify me. Are we still on the same page? Are you still with me? When it comes down to buy side, sell side liquidity. Are you still with me? Okay, Elo, you say yes, you are. All good. Clean, clean, clean. Hang on there. Okay, okay. Okay. Oh, okay, you all good. Clean, 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 clean. I thought you had a question. I thought you had a question. Okay, the rest. Are you still with me? You still with me? Yes. Yes, yes. Okay. Okay. Now let's look at premium and discount. Right? Premium and discount. Now, price will always move from a premium to a discount and from a discount to a premium. Okay, that's business. That's business. Okay, so if you're going to look at price, right? If price is going to do something like this, have some sort of a move towards the upside, inside a premium, right? This is all you need to take away when it comes down to the word premium. Expensive. Expensive. You don't want to find yourself buying price once price is inside an actual premium area. Okay, no, you don't want to do that. Once price is inside the premium area, we anticipate price to hit all the way down into our discount area. Okay, all the way down into our discount area. Now, our 50% is basically our safe haven. Okay, the 50%, that is our safe haven. So once price is inside an actual premium area, this is when we want to find ourselves looking for short opportunities into where? At least into our 50%, right? But traditionally, what will happen? Price will come all the way inside an actual discount. And once price is inside discount, once price is cheap, once price is on sale, once a product is on sale, what do you want to find yourself doing? You want to find yourself buying price, right? Demand. Once there's a demand, you know what? What's going to happen? Price is going to hit towards the upside once again. Okay, so that is what you basically need to take away when I basically make mention of discount and premium areas. Okay, inside an actual premium area, this is where we want to find ourselves looking for selling opportunities. Where's our premium area? This region above. Okay, inside our premium area, we want to find ourselves looking for selling opportunities, at least into our 50%. Okay, once price is inside our discount area, what do you think? What are we going to find ourselves looking for? Are we going to find ourselves looking for buys? Are we going to find ourselves looking for buys inside an actual discount area? Are we going to find ourselves looking for buys? Or are we going to look up, or are we going to find ourselves looking for selling opportunities inside the discount area? Let me know. Do you want to buy price or sell price inside an actual discount area? Let me know. Let me see if you're still with me. You want to? Okay. Someone is saying that, you know what, we want to buy price. We want to buy price. Do you all agree? Do you all agree? Okay. Elo is saying buy in a discount. Okay. Clean. So we buy price once it is inside a discount area. Okay. Inside a discount area, we buy price. And that is it when it comes down to premium and discount. So please do get this little sketch for me down as well. This is basically your Fibonacci, and I will show you how to do this as well. Okay, I will show you how to get your Fib out like this. So please do get this little sketch down for me as well. Please do get this sketch down. And notify me once you are done and you understand. If you have any questions whatsoever, you know what? Feel free to ask. Feel free to ask. If you have any questions whatsoever, feel free to ask. Why people is joining and then all of a sudden they're gone and then they join again? Was maybe internet problems. From a discount area, where would we look to buy the 100%? Oh, no. From a discount area, right? Once again, we want to find ourselves looking to at least target our 50%. Once again, right? Our 50% is basically our safe haven. Okay, 50%, that is our safe haven. Keep in mind, this actual method, which I'm showing you now, I at least want you to have a 2-to-1 ratio, where you can at least make a 2%. You can make much more as well. So when price is inside a premium area, we target our 50%. When price is in the discount area, we also target our 50%. Okay. So swing lows and swing highs, right? This is crucial. This part, the swing lows and swing highs, this is crucial. This is something that you need to find yourself identifying like this, literally. Okay, now a swing high. Okay, a swing high. This is basically, we will find this pattern happening at areas like this, right? Areas where we have some downside momentum. Okay, now in your notebook, once again, write down swing high, write down swing high, put down swing high, right? Rule for your actual swing high would be that price need to create an high with a lower high to the left of it and a lower high to the right to it. Okay, swing high, it will only exist. You can only identify a swing high once you have a high with a lower high to the left and a lower high to the right. That is a swing high. Anything other than that, that's not a swing high. That is a swing high. Okay, so that is the main thing which you want to find yourself taking away when it comes down to an actual swing high. Okay, so let's look at these three formations over here, these three candles, right? These tails that you are seeing going towards the upside, this is called wicks. Okay, wicks. Now, you want to find yourself looking at the middle candle, right? Creating the highest high. Keep it simple. Okay, keep it simple. All you want to find yourself doing is see, do you have an actual lower high to the left? Can you see that this high is lower than that one? Can you see that? And all you want to find yourself saying if price have a lower high to the right of it as well. Can you see this high is lower than that one? That is the criteria of an actual swing high. Okay, so when I say a swing high being taken out, I'm talking about a formation like this. You need to see this formation on your charts. Okay, don't stress about it. We will tap into it as well. Okay, we will tap into it as well. That is for a swing high. Now, for a swing low, right? The opposite. For a swing low, the opposite. Now, once again, inside your actual notes, okay, inside your notes, swing low. A swing low will only exist once you have a low with a higher low to the left and a higher low to the right. That's the only time a swing low will exist. That's the only way how you identify a swing low. Okay, that's the only way. So you have your actual low, the lowest low. Can you see? What do we have over here? A low that is higher than the previous one, right? So this is a higher low to the left. And can you see same thing happening over here? We have a higher low to the right. Okay, so the middle one is the lowest low inside a swing low. To the left of it, you have a higher low. To the right of it, you have a higher low as well. Okay, that's it. Nothing else. That is literally it. Do we all have a clear understanding when it comes down to our actual swing lows and our swing highs? Do we all have a clean understanding when it comes down to our swing lows and our swing highs? Okay, I have a clean understanding. Clean, clean, clean. Clean, clean, clean. Yes, you have a clean understanding. Clean. Next one, right? This is the pattern which we want to find ourselves having inside our premium area or inside our discount area, right? Our fair value gaps. Fair value gaps. Now, in a bull momentum, right? A fair value gap is basically an imbalance in price. Okay. Where do you see this actual imbalance? Where will you find this actual imbalance in price? Can you see with this up close candle over here? This bull candle over here, the green candle. Look at that wick. Can you see that wick over there? Right? Can you see that wick? And look at this up close candle over here as well. Can you look at this wick over here as well? Can you see, right? This gap in between these wicks, this is indicating to us that we do have an imbalance in price. Okay, an imbalance in price. Now, once you see this, this is your fair value gap. Okay, this would be your fair value gap. Now, if price is going to do something like this, right? If I can maybe do this. Price is basically going to do something like this. You can look at this wick. If I'm extend it all the way down, just like that. Can you see this wick fold in this balance over here, right? Do we still consider this being an actual fair value gap? No. No, we don't. Okay, no, we don't. If price did something like this, would we consider this being an actual fair value gap? Yes, we would, right? All you're going to find yourself doing is boxing it out just like that, right? Now, whenever you see price is basically creating these actual patterns, right? Patterns such as your actual fair value gap. This is basically when you want to find yourself, you know what, making yourself ready and find yourself executing on price. Okay, inside this example, for a bullish move towards the upside, this is when you want to find yourself seeking this area, this actual fair value gap over here, inside where? Do you want to find yourself seeking this inside a premium area, or do you want to find yourself seeking this inside a discount area? Let me know. Do you want to find yourself seeking this in a premium area, or do you want to find yourself seeking this inside a discount area if you want a move towards the upside? If you want to move towards the upside, a discount area, right? You want to find yourself seeing this inside an actual or finding this inside an actual discounted area. Okay, that is for a bullish momentum. For a bearish fair value gap over here, now, I want to bring this to your attention. Look at this wicks low over here and look at this wicks high over here. Would you say that that is an imbalance? Would you say that that is an actual fair value gap? Yes or no? Yes or no? Would you consider that being an actual fair value gap? Yes or no? This region over here. Would you consider that being an actual fair value gap? Yes or no? You can look at this example over here as well. And look at these wicks. Would you consider this being an actual fair value gap? Yes or no? Yes or no? You wouldn't, right? You wouldn't. Why wouldn't you? Once again, if I can just do this again. Why wouldn't you consider this being an actual fair value gap, right? Why wouldn't you consider that being an actual fair value gap? This is simply why. Can you see with price over here, this week, we filled in this imbalance, right? But if price created something like this, now only we will consider this being an actual fair value gap. Okay, with this imbalance over there, now only we will consider this being an actual fair value gap. Okay, so let me make this big again. Let me make this big again. That is the only time you will basically view this as an actual fair value gap. Okay, that's the only way. So please do get this down for me. Please do get this bullish and bearish fair value gap down for me. And we're going to find ourselves having a little exercise, and then we're going to dive into the charts. Then we're going to dive into the charts and identify these actual fair value gaps. I'm telling you, this is like, and it's not magic. You can find yourself doing it as well. It's not magic. Notify me once you have your bullish and your bearish fair value gap. Notify me so that we can move forward. Done. You know what, the one thing I was afraid of is maybe like someone coming to record all of this whatsoever, and literally that happened. And yeah, now the person is gone. So notify me once you have your bullish and your bearish fair value gap inside your notepad. Crucial, 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 crucial. I need you to have a clear understanding. I need you to be with me. Done. Okay. Okay, let's get into the little exercise. Let's get into a little exercise. Beautiful. Let's do a little exercise first. That sound like that. Maybe something like this. Okay. Let's have a little exercise. Let's see if you guys have been participating with me. Okay, let's see if you guys have participating with me. So if I'm going to find myself boxing out this area over here, right? What do we expect to see over here? Do we expect to see swing highs over here, or do we expect to see swing lows at this area? Do we want to see swing highs at this area? Do we want to see swing lows at this area? Let me know. Do we want to see a swing high at this area or a swing low? Swing highs is buy side. Well, swing highs and buy side. Clean. Clean. So this area over here, right? You will get swing highs. Swing highs. Okay. That area over there, swing highs. If I'm going to find myself boxing out this area like this, who's resting above swing highs? Who's resting above swing highs? Buy side or sell side? Buy side or sell side liquidity? Who's resting above our swing highs? Buy side or sell side liquidity? Buy side liquidity, right? Buy side liquidity. Clean, 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 clean. If I'm going to find myself boxing out this area over here, who do we have over here resting? Do we have swing lows or swing highs at these areas? Do we have swing lows or swing highs at this area? Swing lows. Swing lows. Clean. Clean, clean, clean. Okay, swing lows. Swing up. Swing lows. Okay, swing lows. So with me boxing out this area over here, right? Over here, we basically have sell side liquidity. Sell side liquidity. Okay, sell side liquidity. Now, I want to bring this to your attention. This, what I'm showing you now, is from a 15-minute perspective. Okay, a 15-minute perspective. I want to bring this to your attention. This is from a 15-minute perspective. See if I can remove the noise. Like that. Now, you might wonder, Diego, now when do you find yourself getting ready for these actual moves, right? Now, like I mentioned, our trading sessions is from 12 midnight New York time until 5 p.m. New York time, not South African time. Okay, not South African time, New York time. So what I like finding myself doing is, you know what? Box out my midnight candle. Let's say our midnight candle is right at this area over here. Okay, that is my midnight candle. The second thing I like doing is boxing out my 8:30 candle. Get that in your notes as well. Okay, get that in your notes as well. Let's just say, for instance, our 8:30 candle is lining up with this area over here. We're going to say 8:30. 8:30 candle, right? This is my 8:30 candle. Put that in your notes, okay? Put that in your notes. Let me box out this area like this as well. And let's call it our midnight candle. Let's call it our midnight candle. Okay, that's our midnight candle. So, me, Diego, this is basically when I find myself getting ready for this actual move to begin. Okay, from 8:30, this is when I find myself getting ready. Okay, so before this happens, this is what I do. Okay, I box out my midnight candle. Get this in your notes. I box out my midnight candle. I box out 8:30's candle. Okay, those two rules. Rule number 3, right? Then I want to find myself identifying my daily highs and my daily lows. Okay, where's my daily swing high? Where's my daily swing low? Okay, get that in your notes. So number 1, I want to find the midnight candle. Okay, number 2, I want to find my 8:30 candle. Number 3, I want to identify my daily highs and my daily low. Those 3 rules. Okay, those 3 rules. So what am I expecting? I'm expecting for price to either take out my swing high or my swing low. Okay, I'm expecting price to take out either my swing high or my swing low. Okay, so let's identify our daily highs and our daily lows. So can you see, this is basically midnight, right? So midnight candle will basically be our lowest swing low, okay? Our lowest low for the day. So I'm gonna mark it off as daily low. Okay, daily low. In between this area, keep in mind, I'm only trying to find it in between this area. Okay. Can you see over here, the swing high point over here? This is my high of the day, right? This is my highest swing point of the day. That is my highest swing point of the day. Okay. Now, I want to find myself getting out my FIB from my daily low to my daily high, just like that. Keep in mind, this is now from a 15-minute perspective. Okay, this is from a 15-minute perspective. So I want to take price from my daily low to my daily high, right? From point A to point B. I will now give you the Fibonacci settings, right? What is Diego expecting after that? Now, what I'm expecting after that, right? After price is taking out our swing high over there, right? This is when I will go to my lower time frame, right? Such as my 1 minute time frame, and identify our pattern right at this area over here, right? Right inside that area. And I will show you it now. I will show you it now. Now the question is, Diego, now where are you going to take price? What did we say? What did we say? Anything above price, right? This whole area is a premium area. Okay, that whole area is a premium area. Okay, so I like getting out my FIB from my low to my high to where price basically took out price. Okay, there we took out price. So where will my targets be? My 50% right over there. Okay, my 50% right over there. Now I want to bring to your attention, right? If you're going to find yourself having an opportunity, now let's say you have an opportunity and your trade is telling you that, yay, you have a 1 to 11 ratio, a 1 to 11 ratio. Please don't take the 1 to 11 ratio if you're not confident. If you haven't backtested this, please don't, right? Please don't. Go backtest it first, and then only you do this. Okay. For now, I only want you to find yourself getting at least a 2 to 1 ratio out of this actual move. Now, some of you might be like, yo, Diego, but a 1 to 11, oh, 1 to 11, that's amazing. You will get it. You will get it. Okay, you will get it. So where's the target? At least our 50%. Boom, just like that. Okay, so this is basically how it will look like for an actual selling opportunity from a 15-minute perspective. Okay, let's look at a buying opportunity from a 15-minute perspective. What? Before we're going to go to a buying opportunity, are we all clear? Are we still on the same page? Are we still on the same page? Are we still on the same page? Okay, with me. The rest, are you still with me? Kimberly, Samina, Luwande, you still with me? You still following? You still following? I need you guys to understand this. I need you guys to basically, you know what, be with me on this one. Okay, you with me? Clean, you with me? Okay. Now let's look at a buying opportunity. Let me remove the noise. Let's remove the noise. Let's take it from, okay, well, Let's take it from this area. Let's say, for instance, our midnight candle is right over here, right? And 8:30's candle, once again, it is way up here. Okay. So let's find ourselves doing this. Let's find ourselves doing this. This. Okay, let's look at a buying opportunity. Now, let's say this is midnight's candle, right? Number one, identify your midnight candle. Number two, identify 8:30's candle, right? This is when you're going to start yourself prepping. Number three, identify your daily low and your daily high. Okay, your daily low and your daily high. Listen, this is not on your daily time frame. This is all on the 15-minute time frame. Okay, this is all on the 15-minute time frame, not your daily time frame. So you identify your daily high and your daily low. So can we all agree that this area over here, this is basically my daily low? This area over here, right? This area over here is my daily high. Okay, this is my daily high. So what am I waiting for next? Next, all I'm going to find myself waiting for is for price to either take out my swing high or my swing low of the day. Okay, yeah, you can see that, you know what, price basically took out our swing low over there. Boom, price had rocket towards the upside. Okay, now how do you box out this? How do you find that 50%? How do you find it? Once again, right? Get it out from your low to your high. Your daily low to your daily high. Okay. Anything below, discount. Everything above, premium. Okay. So once price is basically taking out the sell side liquidity over here, this is when you're going to find yourself going down to your 1 minute time frame and you go identify your pattern. Okay, you go identify your pattern. So you will find yourself having an opportunity looking something like this. Now, when you see that, yay, you have a whole, let's say a 5-to-1 ratio. Do you want to take that whole 5-to-1 ratio? Meaning, for every $100 you are risking, you are willing to make $500. Right? For now, please don't. Backtest this. The reason to why I'm saying this is because I know that, right? You will find yourself, once we're going to tap into the charts, you will find yourself trying to do this next week. You're going to try and doing this next week. I haven't been looking at this since last week or last month or the month before that. No, no. Okay. So please find yourself backtesting this first. Okay. So for now, I at least want you to find yourself having a 1-to-2 ratio. So this is how it basically will look like. Okay. Price still tapped into our 50% and we had a huge shift towards the upside. Okay. So that is for example 6. That's for example 6. So for now, we're going to tap into the charts and you know what? Find these actual areas. And find these areas. Any questions before we're going to go into the charts? Any questions? Any questions before we're going to tap into the charts? Because this is the part where it's going to get interesting. This is the part where, you know what? Everyone is seeking. Any questions before we're going to go into the charts? No questions. No questions. I'm assuming there's no questions. Okay. Now, let's dive into the charts. Well, First of all, let me show you how the actual settings look like with the Fibonacci. Let me just double click on it. So this is basically how it looks like. Okay, I only have my 0% ticked off, 1% ticked off, 50% ticked off. That's it. The rest blank. Okay, so that is the settings for the Fibonacci. Okay, that is the settings. I only have my 0% ticked off, 100% ticked off, or my 1 ticked off, and my 50% ticked off. Okay, that is for my Fibonacci. Time zone, you want to change it over here on the right hand side in the right corner. By time zone, you want to click on it and you're going to change it to New York time. Okay, New York time. That's what you basically want to change it to. Okay. Now, let's dive into the interesting parts. Let's dive into the interesting parts. Look at last week's data. Nas100. Let's zoom price in a little bit. Yeah, we had a nice shift to the upside. Beautiful. Okay, so let's look on 20th. I'm gonna find myself using this replay bar over here. This is the 20th. It's gonna one hour chart. It's gonna 15-minute chart. Let's do this. Let's do this. Boom. So what did I say? What did I say? Rule number 1, right? Let's identify our midnight candle. So we're going to swing price all the way left until we find our midnight candle, which is this one over here. Okay. This is this one over here. Box it out. Box it out. Just like that. Rule number 2. Find 8:30, right? 8:30, this is basically when I find myself prepping myself to begin trading. Okay, this is when I find myself prepping to start my trading day. Okay, so now we basically have identified our midnight candle and we have identified our 8:30 candle, which is this one over here. Next step, identify your daily highs and your daily lows. So can we all agree that this candle over here, can you see? This is our daily high. So if I'm going to take price and just sweep it like that, we can see that we have created equal lows over, well, equal highs over here, right? And who's resting above this area? Buy side liquidity. Buy side liquidity. Okay. Buy side liquidity is resting above this area. Our daily low, can you see over here? Swing low, we have a low with a higher low to the left, well, to the right, and a higher low to the left. Box it out. Box it out. Who do we have over here? Sell side liquidity. Sell side liquidity. Okay. Sell side liquidity. Okay. What's the next thing? Now we want to find ourselves identifying our 50%. Because price is currently traveling in what? Are we currently traveling inside a discount area or are we find ourselves traveling inside a premium area inside the market? Are we inside a discount area or a premium area inside the market? Let me know. Are we inside a discount area or in a premium area inside the market? Let me know. Keep in mind, price is high. We are taking out buy side liquidity. Okay. We are in between the 50 and our, well, you can just look at this whole area over here as your premium area. Okay. This whole region, sure, premium area. This whole region, discount area. Okay, that is how you look at it. You don't have to find yourself looking at, you know what, which one is above your 0 or your 100. You don't look at that, right? All you need to find yourself doing is looking at above this region over here, premium, below, discount. Okay. Now, when price is inside a premium area, right, we are anticipating price to hit from premium to a discount area. Okay, so once you see buy side liquidity has been taken out, this is when you're going to go down to your lower time frame, your 1 minute time frame, and now only you're going to find yourself identifying your pattern. Now you're going to find yourself identifying your pattern. On your 1 minute time frame, this is when you're going to find yourself identifying your pattern. Okay, the reason to why I'm showing it on your 1 minute, you can find this pattern on any time frame. Keep that in mind, on any time frame. But the 1 minute, right, you will have less throwdown. Okay, 1 minute, you have less throwdown. So clean. If I'm a zoom in price over here and look at these three formations over here, do you all agree with me when I say that this is a swing low? With this three formations over here, is this a swing low? Yes or no? Yes or no? Will you agree with me that this is a swing low? Yes or no? Agree, right? Why? Because we have a low. Can you see? It's not as clean as how I basically just showed you, right? But the principle of it remains the same. We have a low, lowest low, with a higher low to the right, higher low to the left. Okay, keep that in mind. So can you see price literally took out the swing high over here, as well as the swing high on our 15-minute. We just took out this actual low over here. Just took out the swing low over here. Boom, just like that. So what is the next thing we want to wait for, right? Some sort of a displacement to the downside with an actual fair value gap. Did we create a fair value gap? Yes, we did. Yes, we did. Right over there. Box it out. All you want to find yourself doing is wait for price to tap into it, and you find yourself going short. Okay, you find yourself going short. Where are we anticipating price to head into? This region over here, because this is our 50%. Okay, what did our note say? What did our note say at least? A note said that we take price to the 50% or the nearest low. Okay, keep in mind for now, I just want you guys to focus on getting a 2-to-1 ratio. Okay, so let's say, for instance, you found yourself going short. Boom, maybe went short over there. You placed your stops above the candle that created the fair value gap. Okay, that one. You target a 2-to-1 ratio with you anticipating price to hit all the way down here into a discount area. Okay, we're in a premium area now. 2-to-1 ratio, lining up with a beautiful swing low over here, lining up with a beautiful swing low over there as well. You being patient. You be patient. You be patient. You be patient. And there your actual take profit has been smacked to the T. Okay. Now let's say, for instance, you missed that trade. You missed out that one. Can you see? Price literally went towards downside, created some sort of an actual lower low over there. Price came back up. What did we create over here? Another actual fair value gap, right? Another fair value gap. So let's say, for instance, you find yourself going short over here. Let's say with a tap, you find yourself going short. Stops above this candle, which basically created the p-value gap. Target your nearest low. Can you see? We have a beautiful swing low over here. And you be patient. And can you see your target has been smacked to the T once again? Can you see we reached the 50%, ticked off? Can you see you had your 2-to-1 ratio ticked off as well? If you would have had to swing this trade, you would have had a 1-to-4 ratio. If you had it from this area, you would have had a 1-to-3 ratio. Back test this. Back test this. Okay, back test it. Let's look at another example. Let's look at another example. This was the 20th. Let's look at the 21st. Still the 20th. 21st, clean. Let's look at the 21st. Okay. Find myself doing this. So now I want you to see it in hindsight. Okay. What are we going to do first? Work with me on this one. What are we going to do first? Rule number 1. What are we going to do first? What will Diego do first? Let me know in the comment section. What will I do first? Identify what? Identify what? What will I identify? Check whether I can over there. Rule number 1, what will I identify? I need you guys to participate with me on this. On the 15-minute, identify midnight candle and 8:30. Let's identify that midnight candle. Let's identify that midnight candle. Just like that. Boom. Let's identify that 8:30 candle. Right over here. Boom. Okay. So now we have identified our midnight candle and we have identified our 8:30 candle. Right? What is the next thing we are waiting for? What is the next thing Diego's going to do? What is the next thing you're going to find yourself doing? What is the next thing you're going to find yourself doing after identifying your midnight candle and your 8:30 candle? What are you going to find yourself doing next? Find your daily high and your daily low. Clean. Okay, you find your daily high and your daily low. So can we all agree that this candle over here was our daily low? Let's box it out just like that. So that is our daily low. Can we all agree that this is our daily high? Right? We have a nice swing high over here. If I can zoom in price, can you see that? We have a higher high, a lower high to the left, and a lower high to the right. That is our daily high. Just like that. Boom. What is the next step you're going to find yourself doing? After you have identified your actual daily high and your daily lows, what is the next step you find yourself doing? What is the next step? What is the next step you find yourself doing after you have identified your daily highs and your daily lows? Take price from premium to discount, right? So that's basically what we want to do, right? We want to take price from premium to a discount area, right? But first we want to identify where's our swing low, swing high. So we're going to get out our FIB from our swing low of the day to our swing high of the day, which is right over there, right? The minute price basically finds itself breaking above this area, you go down to your lower time frame. Okay, you go down to your lower time frame. Now, can you see over here, we didn't have clear displacement. We broke price above, but we didn't have the cleanest displacement over there, right? But can you see with this nice aggressive candles thrown towards the downside? Clean displacement. Okay, now how do you approach it? How do you find yourself approaching this? Can you see that we had a nice swing high over there, which we took out? Can you see that price basically took out a swing low over here as well? Can you see that? Boom. Which pattern is that? Is that our buying pattern or our selling pattern? Is this our buying pattern or our selling pattern? Well, buy side liquidity. Is that our buy side? Well, our buying pattern or our selling pattern? Sell side liquidity. This is our selling pattern. Okay. Now, let's say, for instance, price is over here. Right? You are seeing this now. Now, you already saw that, you know what? Your first rule of your selling pattern is saying that, you know what? You want to see price take out a swing high, which we did. Ticked off. Rule number 2, you want to find yourself looking for a swing low to be taken out. We did that. Ticked off. Rule number 3, you want to find yourself waiting for some displacement, taking price from one point to another. Do we have clear displacement over here? Yes, we do have. Tick off. Right? Now you want to find yourself, do we have an actual fair value gap inside this area? Do we have one? We have one over here. Can you see that? Clean. We have one over here. Clean. Now, what you want to find yourself doing is, right, where you find yourself having the displacement towards the downside. This is where you want to get out your FIB again. Okay, from your high to your low. From your high to your low. Okay, where you basically had your displacement. Now, my question to you now is, can you see this fair value gap over here? Is this one inside a premium area or inside a discount area? This one over here. Fair value gap A, fair value gap B. Is this one inside an actual premium area or is it inside an actual discount area? Number A. Well, or letter A. Letter A. Is it in a premium or inside a discount? Look at your levels. Look at your levels. Are we in a premium or are we in a discount? A is in a discount. Right? A is inside a discount. So do you want to find yourself selling price from an actual discount? No, no. You want to sell price from a premium. Okay. You want to find yourself selling price from an actual premium, which is at point B. Okay. Which is your point B. So all you're going to find yourself doing is literally waiting for price to tap inside your premium area for you to go short once again, right? This model is to show you that you can at least have a 1-to-2 ratio, right? But since price is inside a premium area, where do we expect price to hit into next? Inside a discount area, or at least the 50%, which is our safe haven. Now let's see what happened. Keep in mind, where's your 50%? On your 15-minute is basically this line over here, this line over there. Okay, so if I can box it out maybe like this, just like that. And box it out as 50%, just like that. Let's go back to the 15-minute as well. Clean. So all you want to find yourself doing is, can you see this candle basically created that actual the fair value gap? So you want to place your stops at the high. Your target is your nearest swing low. Can you see that we basically have a beautiful swing low over here? So that could be your target, giving you that 1-to-2 ratio. Okay, giving you that 1-to-2 ratio. Boom. There, your take profit has been smacked to the T once again. Can you see, with price basically having some sort of a move towards the downside, we created another fair value gap. We created another fair value gap. And boom. Can you see that? Can you see, if you missed this opportunity, you had another one right over here. And you have the same approach from high to the low, just like that. Okay, over here, we didn't tap into our actual premium area, right? But if you find yourself going short, where's your stops? Above the candle that basically created the fair value gap, right over there, like this. Target 50%. Did you have your 2-to-1 ratio? Yes. Did we tap into the actual 50%? Yes. If you had taken this trade from, you know what, your initial area over there, you would have had a 1-to-3 ratio. Look at the drawdown. Small drawdown. Are you guys with me? Should we do another actual example? Should we do one more example? Should we do one more example? Yes, please. Okay, let's do another example. 21st, 22nd. 22nd. Let's just remove all of these noise. Let's forward price into the 22nd. 22nd, we had news events, huge news events, I remember. Because that was the boy's birthday. Hey, what's happening? Okay. So, once again, I want you guys to do this one with me. Okay, I want you guys to do this one with me. Let's stick with that one. Let's go to the 15-minute. Let's take away this whole noise over here as well. This whole noise. Just take that away as well. Okay. Okay, let's go. I need your participants. Okay, I need your participant. Did I say that right? Okay. Well, anyway, I need you guys to work with me on this one. Okay. Rule number 1. Talk to me. What are we going to find ourselves doing? Rule number 1. Talk to me. What are we going to find ourselves doing? Rule number 1. Talk to me. Walk with me on this one. Walk with me. Because you're going to find yourself doing this on your own as well. Walk with me on this one. Rule number 1. What are we going to find ourselves doing? Identifying what? Identifying what? Identifying the midnight and 8:30 candle. So let's identify the midnight candle of the 22nd. Midnight candle right over here. Boom. So we have identified our midnight candle. That's rule number 1. Rule number 2. Let's get that 8:30 candle. Let me box it out. That is my midnight candle. Let's get that 8:30 candle right over there. It's this one. Okay. Rule number 2. Identify our daily highs and our daily lows. Can you all agree that inside this area over here, that this was my daily high? Can you see that swing high over there? Box it out. Extend it to the future. Who do we have over here? Buy side liquidity. Okay, buy side liquidity. Buy side liquidity resting above this area. Identify your daily low. Can you see this area over here? That is our daily low. Box it out. Box it out just like that. Over here we have sell side liquidity resting. Okay, over here we have sell side liquidity. So rule number 1, we box out our midnight New York candle. And you know what, from 8:30 onwards, this is when we start sitting in front of our screens, and this is when we find ourselves monitoring price. Okay, monitoring price. Number 2, we identify where's our daily highs, where's our daily lows. We want to see price sweep out our daily high or our daily low. Now, when price sweep out our daily high, this is basically when we want to find ourselves looking for selling opportunities. Okay, when price sweeps out our daily low, this is when we want to find ourselves looking for buying opportunities. Keep in mind what I just showed. Well, keep in mind what I basically presented earlier. Buy side liquidity above. Once we break it, we're looking for selling opportunities. Sell side liquidity below price. Once we break it, we're looking for buying opportunities. Okay, that's how you look at it. So clean. Let's scale down to that 1 minute time frame. Let's scale down to that. Well, before we're going to scale down to that 1 minute time frame, this is what I want to bring to your attention. Okay, this is what I want to bring to your attention with this actual example. Can you see, if we're going to box out this area like that, boom, and go down to our actual 1 minute time frame, just like that, right? Now, can you see, we had a move towards the upside. We had a, well, over here, we had a break. We had sloppiness over there. We had a huge shift towards the upside. But did we create a pattern though? No, we didn't. No, we didn't, right? Yes, we created some sort of initial fair value gap over here, right? If you would have found yourself going short from it, place it above the one that created the fair value gap, right? You at least have a 2-to-1 ratio. Did you have your 2-to-1 ratio? Yes, you did, right? But this is not the criteria which we are looking for. Okay, this is not the criteria we are looking for. So we do have some buy side resting above this area over here as well. Boom. Okay, we have some buy side liquidity resting above this area as well. Okay, so if I'm gonna play price out, right, and go back to my 15-minute. Can you guys see that price basically created another swing high over here, right, where we had buy side liquidity? So this is now when I'm going to find myself shifting my actual FIB to my daily high. Can you see? This is now my new daily high, right? That is now my new daily high. Okay, 50% right over here. Let's box it out. Let's box out that 50%. Just like that. You go back to your actual 1 minute time frame. And now you find yourself waiting, right? You sit on your hands and you wait for price to present what you want to see. You're not going to just execute thinking that you know. No, you have to see it first. Okay, you have to see it first. Can you see that we had a swing high over here? Price took it out, but we failed to take out the swing low. Invalid. Bam. Invalid. Okay, you wait, you wait, you wait, you wait, you wait. Boom. You see nice candles thrown towards the downside, right? Let's zoom price in. Did we take out a high? Yes, we did. Did we take out a swing low? Yes, we did. Right? Can you see with that wick? We took it out. But did we create any fair value gaps inside this area? Did we create a fair value gap inside this region over here? Talk to me. Can you see a fair value gap which we created inside this area over here? Yes or no? Yes or no? Yes or no? Do you see any fair value gaps which we created inside that region over there? There's no fair value gaps, right? So you're going to wait for that fair value gap to occur. Boom. Do you see one now? Yeah. Yes. Yes. Box it out. Box it out just like that. Box it out just like that. You can get out your FIB from your low to your high, just like this, right? From your low to your high. So let's remove all this noise in the background. So now you basically have your 50% over here. Everything below, discount. Everything above, premium. Okay, but can you see this actual fair value gap over here is lining in, in between your actual 50%, in between your actual discount and your premium area, right? So you can either find yourself going short from the tap or from the tap inside the actual 50%. Okay, so let's say, for instance, your position looks something like this. You place your stops above the candle, which basically created this actual fair value gap, right? That high over there. Look at the pop. Look at how much you are risking. 6 pops. You're risking 6 pops. You at least want to find yourself having what? A 2-to-1 ratio. Right? You want to find yourself having at least a 2-to-1 ratio. Can you see that we have clear swing lows over here? So price can basically find itself heading inside this region over here. Okay. There, price tap, and you humble, and you wait, and you humble, and you wait, and you humble, and you wait. You have a swing low over here as well, right? You have some sell side liquidity resting over there as well. You humble, and you wait. You humble, and you wait. You humble, and you wait. You humbled, and you wait. Boom. Did you get your 50? Well, did you get your 2-to-1 ratio? Yes, you did. Did price hit the 50%? Yes, it did. Once you grow confidence, you have a whole 1-to-9 ratio, meaning if you're risking $100, you are willing to gain, you know what, $900. Look at that risk. 6 pips. 6 pips, guys. That is some next level stuff. That is some next level stuff. And can you see? Look at this. Look at how price reacted after we basically tapped into this actual discount area and we literally just flew to the upside. Look at that. We tap inside the discount and we flew to the upside. We literally flew to the upside. Look at this one. Look at this one as well. Look at this one. Look at this one. Go study this. Go study this. Please go study this. Okay. Look at this one as well. We have a swing high over here. Took it out. Can you see over here? We have a swing low. We took it out. Can you see that? Swing low. We took it out. Which one did we take out first? Our swing high or our swing low? Which one did we take out first? We can see we took out our swing high first, right? The criteria which I shown you guys in the beginning of the session, that is what you are looking at. That is what you are searching for. That is what you are seeking for. Okay. We took out a swing high. What is the next step? We wait for a swing low to be taken out. Clean. We did that. You wait for displacement to the downside. Clean. We have that. You want to identify your actual fair value gap, right? You want to identify your fair value gap in which area? Premium area. Okay. For selling opportunities, premium area. So you get your from that high to that low. Inside this premium area, do we have displacement? Well, did we have a displacement? Yes. Do we have a fair value gap? Yes. You box it out. You box it out. I gave you 7 simple rules to follow. 7 only. Okay, you're being humble. You're being humble. You're being humble. There, you are triggered inside your actual entry, right? So your entry would have looked something like this. See, with the first tap over there, where do you place your stops? Above this candle over there, right? Above this candle over there, which basically created the actual fair value gap. You at least want a 1-to-2 ratio. You have it. Well, price failed to deliver our actual 50%, but did you get your 2-to-1 ratio? Yes, you did. Yes, you did. Now, let's say, for instance, this was the actual trade you took, right? This was the first one you saw for the day. You just got stopped out. Let's say you got stopped out. All you're going to find yourself doing is what? You risked 1% to gain 3%. So you lost 1%. You lost 1%. You're not going to cry about that. You wait. You wait. You wait. You already gained around about 9% if you caught this whole move to the downside. You lost 1%. You are up 8%. You're up 8%. Right? Clean displacement towards the downside. Once again, get out that FUB. Get out that FUB from your high to your low. Once again. Right? From your high to your low. That's it. You look for your fair value gap inside your premium area. Okay, inside your premium area. So where do you have your actual premium area? Right over here. Can you see that we do have a fair value gap over here? You have one over there. Can you see we created one over here as well? Price tapped into it. Had a beautiful shift to the downside. All the way up here, we have another one over here as well. Rather find yourself targeting the first one. Okay, the first one. So all you're going to find yourself doing is be patient. Price is tanking to the downside. Perfectly fine. Perfectly fine. Price is tanking down. You're being patient. You're being patient. You're looking for shorts. You are looking for shorts. Where's your stops? Above the candle, which basically created your fair value gap. Right over there. Boom. You at least want a 2-to-1 ratio. Okay, you at least want a 2-to-1 ratio. The 50%. Keep it in mind. Boom. There you are triggered inside your actual your trade. You wait. You be humble. You be patient. And then voila. You are up another 3% if you took this whole trade. You are up, let's see how much. If you caught this whole move, this is a 9% towards the downside, right? If you caught this move, let's say you took an actual L, this whole move, right? You are down 1%, so you are up 8%, 8% plus another actual 4%. How much is that? 12% in one day. 12% in one day, which is amazing. Did you get your 2-to-1 ratio on all of these actual examples? Yes, you did. And that is the main focus. That was the main thing I want to bring to your attention, that you can at least have a 1-to-2 ratio. Once you gain confidence inside this actual method, this is when you can find yourself now, you know what, having that actual overall moves towards the downside, targeting your nearest lows or your nearest high, or taking price to your 50% at least. At least. Guys, how did you find this actual session? Was it informative? Did you take something away? Do you think that you can find yourself doing this on your own? Did you find this informative? Did you take something away? Did you take something away? Was it informative or not? Nah, it's not. Did you learn something? Every week, right? Not every week, every day. Okay, you backtest every single day. Every single day, you backtest until you are blue in the face. Definitely informative. With lots of practice, we can do this. Most definitely. Most definitely. 8:30, you wait. Now, can you see, sometimes you will find yourself having opportunities like this as well, right? Where price literally just run away. Price literally just run away. Right? You get that from your low. This is your low for the day, high of the day. Right? We haven't created another actual swing high for us to be like, you know what, we're taking it to this area, right? So I'm keeping my actual FIB inside this region. Okay, I'm keeping my FIB inside that region. Let's see once again what happened. Let's see once again what happened. Boom. Can you see that? Can you see this? We took out that high right over there. We had a swing low. Now, with price taking out the swing low, this is already confirmation that we are changing our structure. Okay, we're changing our structure. And you do literally the same thing. You do the same thing. Can you see there? You have your actual your premium area. You also do have an actual fair value gap lining up inside that premium area, right? Inside that premium area stops way above this candle over here or above your actual highs. Which one is comfortable to you? Anyone that is comfortable to you. Okay. you at least want a 2-to-1 ratio. At least. Or at least your swing lows. Can you see that? Little drawdown. Little to no drawdown. Say you swing price. Say you swing price to your 50%. Oh, Diego, what are you doing now? What are you doing now? Can I do this? Can I do this? Did we create a swing high which we took out? No, we haven't. No, we haven't. So I'm keeping my FIB the way it is. My 50% is right over there. This is you being patient. This is you being patient, 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 patient. Let me go to a higher time frame though. Being patient, right? You sit, and you wait. Guys, this is not magic. This is something that you can find yourself having 7 pips to gain 200. It's not magic. It's not. You can find yourself doing this as well. Okay, and that is literally what I wanted to bring to your attention this evening. I hope you had, you know what, I hope that you had enjoyed this actual session. And you know what, I'm glad that you could have taken away something. Highly appreciate it. So that is literally it from me. You know what? I will see you guys on the next one. It's me, your boy D, and I'm wishing you all a blessed evening further onwards. Okay? Thank you, guys. I thank you. All a pleasure.